Yeah, thanks, guys. Nearly there. Last little box just setting up. I just wanted to say apologies for yesterday's webinar. We had a technical issue, which meant we just couldn't get the webinar running up in time. So my apologies if you turned up for the webinar yesterday and it wasn't able to run. I'm sorry about that. As soon as it became apparent that we wouldn't be able to solve the technical difficulty, I put up a notice in the feed, but sorry about that if you're waiting for the webinar. But everything's totally back to normal today, so it's business as usual. So thank you for your patience with that. Well, let's start with our dominant currency sentiment pair for the day. The dominant currency sentiment pair for the day is the Euro-US dollar currency pair. Now, let's just go through the reasons for this upside. A lot of the reasons for the Euro-US dollar upside today is based on optimism regarding the recovery of the Chinese economy. Now, just to remember, put ourselves in the big picture, between the US and China, they make up together around 40% of the world's GDP. So as a result, what happens in the US and what happens in China is important for global trade. China obviously is a huge manufacturing hub. So any signs of manufacturing recovery within China is a boost to the global economy. And this week has seen some Chinese stocks rallying very strongly. Let me just point a report out to you in the feed. Do take a look at these tradable sentiment shifts post at 10:16. That kind of explains in a nutshell sort of the reason for the optimism we're seeing over Chinese economic recovery and how that sort of translated through into world markets. So do take a moment to look at that. And the most recent update we've had is the last PPI data reading has shown a measure not as badly as expected. So it's a -3% drop in inflation. So that's a slightly better inflationary reading than the market was expecting. And so that sort of fueled this optimistic view, particularly out of China. And that's why we've been seeing dollar weakness. So we can see the dollar just tracing up to that overhead resistance level, but we've been seeing this weakness carrying on in the dollar, which has been pushing up the major pairs. Now, the Euro-US dollar, we maintain an upward bias on the pair alongside this reflation narrative that as essentially the world starts getting back and this economic recovery hopes are growing, that is a negative for the US dollar. So that's part of the reason why we're seeing this Euro-US dollar upside. Now, in terms of where to enter here, there's two options. The option one is here, just at this descending trend line. So we're just going to zoom out so we can see the significance of this level. You can see here, we've been looking at this descending trend line. You can see sort of price has been toying with it for the last couple of weeks. And we're looking here, a break and a close above that level is a bullish signal, okay? So if you get a break and a close above this signal, it's a bullish signal. So this is potentially an area where we could anticipate buyers coming in from. We've got the descending trend line. We also have just above the daily pivot point, and the 1.300 level is not too far away. So that's one potential areas for as long as the current sentiment remains. Now, another area, and arguably a more preferable area, would be a deeper drop down to this 11280, 11270 region. We'd anticipate buyers, and obviously that's a slightly deeper pullback, and you're slightly better positioned, especially if there is a break and a breakout at that level. Getting in below the level is obviously advantageous in terms of letting a position run longer. So they're the two options that you've got. Both of them are legitimate. Probably this level is the preferred level. It's a little bit a deeper pullback, and there's some more obvious consolidation. You've got the S1 pivot point here, and then you're looking back up towards the highs of 1.1360 and potentially beyond with this risk on move if it continues. Now, the risks to this outlook are as follows. First of all, we've got the risk that the market turns back into a risk-off mood. At the moment, we can see that currencies are in a kind of a risk on setting, broadly speaking. A little bit of weakness now in the Australian dollar, but broadly speaking, we've got strength in the commodity currencies, Aussie, CAD, New Zealand dollar, and we're seeing weakness in the Swiss franc, Japanese yen, as well as the US dollar. So broad risk on moves in the currency block. We can see copper prices well supported on the day, heading up towards the ADR high of the day. Got Brent crude and WTI pretty much range bound. We also have the support in the futures markets. We can see S&P 500 running supported above that pivot point. NASDAQ just pulling to highs of the day, just pulling off the slightly best prices. And we have the DAX sort of well supported on the day. Euro stocks a little bit more mixed, and the FTSE 100 moving down, but volatility moving down. So generally, looking at yields as well, a little bit of a mixed picture in the yields, but broadly speaking, that risk-on sentiment is remaining in the markets. We can see it's not a completely straightforward picture. You can see in European cash markets, we can see that the FTSE, Italian FTSE, Portuguese 20, and the Greek index are all lower on the day alongside the UK FTSE. So it's not a completely clear picture. However, that risk on tone is still sufficiently in the market, driven by sort of that optimism of economic recovery. But yet again, we have to remember the main narrative of the market, which is it's economic recovery on one hand versus virus fears on the other. And we will, of course, have virus numbers coming out later on, starting in the US session. And obviously with the US leading the charge with the second wave COVID-19 infections, that will be a key market focus. So that is a risk to this euro US dollar upside. If we start to see any virus fears coming back on large numbers or larger lockdowns, that will of course result in dollar strength and euro US dollar downside. The other main area to be looking at is the initial jobless claims and continued jobless claims we've got later. We will of course look at it in a moment, but the thing to be looking at is as states start, locking down or shutting down a little bit longer than expected, even if it's in little pockets, the market's going to be waiting to see how that impacts joblessness in the US. And that's obviously a big concern, is how long can governments support joblessness in countries before the problem becomes untenable and unbearable for economies. So the market will be looking at that very carefully. So we'll look into those jobless claims, continued jobless claims next. But that's really our dominant currency sentiment pair for the day. Looking ahead, what we can see here looking ahead is, okay, first of all, to mention the German data we had out this morning. Now, this kind of underlines some of the difficulties that countries have coming back from COVID-19 lockdowns. We can see that exports rose 9%. So that's, obviously a big improvement from April's really bad falls of like 24%. So that's good to see a nearly double-digit rise in exports, slightly below the anticipated, but that's okay. Imports down 3.5%. You can see that that is below minimum expectations, and the trade balance shows still a surplus of 7.6 billion. So mainly export-driven trade balance there. Now that's down from recent, the record highs of 25 billion euros. So that just shows you how difficult it's going to be for countries to come back. Germany is, the manufacturing powerhouse of the Eurozone. So it's often looked as a good indicator for what's coming up for the Euro. And this just shows, yes, there are some good numbers in terms of, good numbers to the upside, but that trade balance is still, 7.6 billion is well off the record highs that we've seen. So there's a lot of work to be done. It just shows how difficult it will be for countries getting back to full operation post COVID-19 lockdowns, and with all these secondary viruses and pockets of the virus getting out of hand again. It's just going to be a long uphill struggle. However, at the moment, the market just keeps focusing on the Federal Reserve adding stimulus, governments adding fiscal support, and that's been supporting markets, and particularly the positive news out of China with their inflation data for June, just being not as bad as expected. That's been, fueling that risk on tone. So in terms of the rest of the session, we have a couple of scheduled events that could impact the risk tone. They, of course, are initial jobless claims and continued jobless claims. Now, just don't forget to have a look at our daily risk event outlook. This kind of sums it up and puts it into detail. With the jobless claims, what we're expecting here is to see this continued drop in initial jobless claims. This is the initial jobless claims numbers. So we're expecting to see a continued fall in that, because obviously the economy is getting going and starting working again in the US. So these figures aren't really expected to rise. They should be dropping off, and we should see this continual trend to the downside from the March and April highs when we're at the height of the lockdown. Now, arguably the more interesting data point is the continued jobless claims. This will give a better indication of how joblessness has really impacted the US as the battle to contain the coronavirus goes on. What the market wants to see is to see this figure continually dipping downwards. Now, there was a little nip higher last reading, and that will be if we start seeing this trending higher, that will start to be a concern for the market. So the market wants to see this dropping lower to keep those economic recovery hopes alive. Now, looking at expectations for the event, it's expected to be 1.37 million. Minimum 1.2 expectations, maximum 1.9. Obviously, the lower number is better. Similarly with the continued jobless claims, the lower number is better. 18.95 million jobless claims expected. 18.6 million is the lowest range of expectations. So in terms of trading this, what we'd be looking for is we'd be looking for initial jobless claims. The most bullish outlook would be if the initial jobless claims were below 1.2 million, and in addition, we also got continued jobless claims below 18.6 million. That would keep the economic recovery narrative hope alive. Obviously, have to balance this against the number of COVID-19 cases and rising cases. So that will be, you have to bear that in mind, but that would be the most bullish outlook. And if that was the case, then the euro-US dollar pair would make sense as the best pair to be trading. So that would, you'd expect to see more euro-US dollar upside, and obviously looking at profit taking at this 1.1366 region, just heading into that R1 resistance point. So that's something to be looking out for later. The most bearish outlook would be if we got this. If we got initial jobless claims coming in above 1.9 million and continued jobless claims, hitting above 19.8 million, that would be the least bullish outlook, and that would be a more bearish outlook. So we'd expect euro-US dollar sellers and S&P 500 sellers, as hopes of the economic recovery could potentially be tempered. So that definitely has the potential to impact the risk tone later on in the US session, alongside any news of latest virus numbers, which we get coming in from around 2:30, and we get different states reporting on their latest numbers. And the numbers in the US are continually growing. Thankfully, the death rate is not rising. So that's another thing to be keeping an eye out as well, is if we see a rise in the death rate, that will be more concern. Obviously, that will lead more shutdowns if we start seeing more people dying. So just to be aware of that coming up as the most likely scheduled event to be moving the market. In terms of other risk events to be looking out for, obviously we need to be taking an ear out for Brexit. Anything positive towards that being a deal more likely to be done, that will be positive for the pound. We have the European Recovery Fund, that is expected to announce some kind of compromise, is expected to be announced this week. Haven't seen that compromise released yet, so look out for that, particularly in terms of euro-US dollar trading and euro volatility. Don't forget, we've got the Frugal Four plus Finland, potentially the Frugal Five, who are, got some concerns about some elements of the recovery fund. So that's one area to be looking out for. Obviously, positive vibes from the Frugal Four plus Finland would be good for the euro. We also have US-China tensions. There is a narrative developing, which I really hope fades away, which is kind of China versus the West narrative. That's a narrative to be looking out for. The last thing we need is a prolonged, trade war, not only between US and China, but then that bubbling over to other major economies. That's not going to be good for global growth. So just keep an eye out for any, US-China tensions, UK-China tensions, Canada-China tensions, Australia-China tensions. These are some of the ones that have been bubbling up, and just look out particularly for tariffs, which can potentially harm the risk sentiment. A lot going on as always at the moment. So, that's the other thing to be aware of. Very mixed markets. Of course, one thing to be looking out for is, don't forget, we saw some strong moves up higher in gold. Gold hitting that 1800 level. And we also see silver hitting that $19 level as well. So that was just some interesting moves that we've seen of late. I'm going to get now to the question and answer session. I'm just going to have a look here through the questions. Okay, so Hasma, when is the Brexit news? There is no scheduled Brexit news expected, Hasma, but the thing to be aware with the Brexit news is it can come across on the feeds at any time. So you just have to keep an eye out for it, and remember, it can impact the pound strongly. So keep an eye out for keep the squawk on. I think there's been a problem with our squawk at the moment. So that should be rectified. So just keep checking back on that to check when the squawk is fixed. Okay, that should be fixed now. So if it's not automatically just working, you might just want to reboot your terminal, log out, log in again, and it should be working just fine. So there's no scheduled Brexit news out at the moment, Hasma. Jimmy, morning, Jimmy. Okay. Yeah, I'm caught out again by the pound this week. Yeah, the pound has just been such a pain. Let's have a look. Took a long euro pound trade at 90.40, looking for a test back to 90.80. What are your thoughts, pound and euro in the near term? Yeah, let's have a little look at that. Let's just go to the pound, euro pound pair. Now, where is it? Here we go. Yeah. Yeah, the euro pound, it's been a real pain trading the pound recently, and you can just see we've just broken through that trend line to the downside. My thoughts on the pound at the moment, Jimmy, is I'm staying away from the pound because I was caught out a few times previously, just seeing a more optimistic Bank of England, not mentioning negative interest rates. I thought it was quite a positive outlook. Really for the pound, is to see the pound sell off, and then there's a number of situations you're seeing the pound sell off, and then recently now we're seeing the pound strengthen. But it doesn't make sense when the pound strengthened, because we saw the the announcements coming out sort of 28th, 29th of June. We saw the announcements coming out for fiscal stimulus coming for the UK, and then we saw the pound sell off, and it has subsequently rallied. So that could be a rally into the fiscal stimulus that we saw from the UK. But having said that, what I would say is there is an area on the weekly charts just worth being aware of. So medium-term pound, I am bearish, Jimmy, because of until the Brexit situation has been resolved in some form or the other, I'm expecting to find pound sellers. So one area where I'm expecting potentially to find pound sellers is back up here at that 1.2700 handle, just coming in line with that descending trend line. So any move into this region, I would expect to find medium-term sellers, particularly if this, this move higher keeps on. So I am expecting sellers coming in there. I am medium-term bearish the pound. Now, in terms of the euro, I'm more bullish on the euro medium term because of the European Recovery Fund, the PEP program. Huge amounts of stimulus are due to be released into the Eurozone, which would be very supportive for the euro. So I do have a euro pound upside bias. The only thing that's keeping me on the sidelines with the euro pound pair is the fact that the pound hasn't really been behaving as it ought to have been. But on a swing trade perspective, I would still favor euro pound upside in the near term. So that's my take on the upside, Jimmy. But you have my sympathies with being caught out with the pound. I think a number of people have been caught out trying to trade the pounds. I'm just trying to wait until I can see the narratives matching the price action. It just becomes a little bit more straightforward for trading perspectives. But that's my take on the pound and the euro. Hi, Sibu. What do you think about shorting New Zealand dollar, Canadian dollar at current price? RBNZ said they could move to negative rates. Oil is a bit more supported. With the Fed pushing to devalue the dollar, commodity prices should remain supported. However, since asset classes are detached from reality, not sure if I should even take it. Yeah, Sabusia, I do see your rationale there. One pair that I think is, what about the Australian dollar CAD short with the increase in COVID-19 cases in Victoria? Obviously, the coronavirus, because I know that New Zealand had a dairy auction yesterday, and dairy prices, I think, rose something like 14%, which is potentially supportive for the New Zealand dollar. It didn't get a lot of reaction, but it was still a very good dairy auction for the New Zealand dollar. So potentially something like the Euro CAD could be good. Let's just take a look. Let's take a look at what you're saying. We'll take a look at New Zealand dollar CAD. Yeah. Yeah, okay. I think if you were to short the pair, I wouldn't be totally opposed to it, Sabusio. I think your logic is good. So I could see that being a legitimate move to the downside. One area to be looking at is this trend line on the 4-hour chart. So, looking for a break and close, looking for a break and oh, I don't know. Right. Looking for a break and close on that trend line. So that would potentially be a trigger. So you have a break and close that slight trend line and just looking for a move down, potentially down to that ADR low of the day. Looking at the Australian dollar CAD pair. Yeah, you see potentially you've got this sort of, false break of this 9.5, just below this 9.500 level. So yeah, I think the other option is an Australian dollar CAD, and you potentially look at, a retracement back up to the pivot point or the R1 zone, and then just riding a stop above the highs there. That would be, not a bad option on the Australian dollar CAD pair. But I think your rationale for that Sabusio is sound. So either of those, my only concern about the New Zealand dollar is that dairy option price. So it may be fine, but it's just something worth to be aware of. Yeah, okay, Richard, looking at the Aussie US dollar. Let's have a look. Yeah, okay. So Richard, looking at sell position at market with Aussie New Zealand dollar, given the lockdown implemented in Australia, price seems to be holding at the 106.30 region. Would you wait for a break retest of the 106.100 level? Yeah, I think the problem with here is you're right in that support, that key support level here. So price can break and move through, but you can see we had profit taking buyers here, here, and here. So you're heading into that key support zone. So a kind of a better place to potentially look at shorting that pair would be a retest back of that trend line, just running higher here. Just 1.0650, that kind of region. Any retest back up to there, I would favour. Market for me is just a little bit tight. You might run through it, Richard, but you might be chopped around. You might be moving up. And the question is, if you sold here, you'd really need your stop above that mother candle. You can see here you've got the mother, and then you've got the inside bar. All these inside bars, false break of the inside bar, or close, a couple of potentially false breaks of the inside bar. So I would be looking at running my stop above the high, which is quite a large stop. And then if you come back in, it would be a break and a close above this level, which would indicate to me that I'm potentially in the wrong trade here. So if you did sell at market, you're running the stops above the high, and then using that trend line as a bit of gauge. I think my preference would be waiting for a retracement back up towards that 106.50 region. Stops a little bit tighter, just running above the mother candle high, and then looking for a move back down below. The other thing is to trade potentially a break of this. You can see there is like a triangular pattern forming. So the other entry is if you want to, you can see you've got this, so I've got to turn my cursor back to a cross every time you put your trend line in. So you can see here there's a kind of a descending triangle. So you can see that the price is moving up high, getting sold off, moving high, getting sold off, moving high, getting sold off. So in this pattern here, the other way of trading it, Richard, is to wait, either wait for a break and a close above that level, but below that level, and then you're looking for a around 1.0800, around a 200 move to the downside. So that would be 200 points down lower. So you could take if you get a break and a close on the daily chart with price breaking below this level, you could look to enter a retracement and retest. You could enter on a break and close, or you could enter now and anticipate the break, but and maybe run a slightly tighter stop just above the pattern here. So if you do break above that pattern, break and close above that pattern, you would close out the trade. Another option is to keep your stop above the mother candle, but if you see a break and close above this descending triangle pattern, you could close that out. So that's how I'd handle that technically, Richard, and that's how I'd use it over a swing term point of view. So in short, there's nothing wrong with shorting it from market here, Richard, and anticipating the break. There's nothing wrong with that at all. Other option, you could sell on stop, you could wait for a break and a close, you could wait for a retest, you could wait for a pullback top. So that gives you some options. The other thing, Richard, is you can split your position. So you could have a part of your position at market, part of your position sell on stop, and part of your position in case there's a retracement and then just make sure you're not over leveraging in that. But that's another option of just sort of scaling into the position. Okay, Sabus. Yeah. So Sabusio is saying price is on a descending trend line on the daily. Yeah, good spot. Yeah, it's a very key level. So that'll be, you know, if you were favoring those shorts, Sabusio, technically and fundamentally, everything's come together in my book. That makes sense to me. Just that one issue about the dairy option price. Thank you, Anthony. The squawk is fixed. Just refresh. Yeah, just refresh the page and the squawk should be working again. So make sure you do that if you haven't done it. Anthony, thank you very much. Raphael, sorry I joined late. Was there a webinar yesterday? Raphael, I'm afraid there wasn't a webinar yesterday. We had some technical problems, so we were unable to run the webinar, but that's all been solved today, and we're not anticipating any further problems going forward. So apologies if you came to the webinar or tried to find the recording or missed it. It was a technical issue. Put it up in the feed, but obviously not everyone's going to see that. Oh, Yanka, I was surprised by Australian dollar after the lockdown announcement, was expecting more downside. Yeah, Aussie's also going to see a little bit of support, Yanko, as a commodity currency. So with the hopes of the economic recovery, that's probably going to be limiting the Australian dollar downside. If we see, COVID-19 fears rising back again to the surface, then Australian dollar, we could expect to see some quite sharp sell-offs, I would anticipate, and maybe an Aussie yen would be a preferred pair in that instance. Yeah, Ravinda, NASDAQ going up since May, S&P 500 going up since 10, 11th June. Does it not imply there was a growing demand for US dollar from the stock markets? If yes, why is there downward pressure on the US dollar? Yeah, Ravinda, you're right. There is a growing demand in order to buy US stocks, but it's not as great a demand as there was when the coronavirus, got my words muddled up, prompted a strong demand for dollars. So yes, there is US dollar demand, but not as badly as it was during the COVID-19 crisis when the US dollar was being demanded for a different reason, for safe haven reasons. So the downward pressure on the US dollar is that as economies start recovering and growing, you'd expect the reflation trade to take place and US dollar outflows. So we should see US dollar weakness. We also, of course, have virtually unlimited quantitative easing from the Federal Reserve, which is also a downward pressure on the US dollar. B, if US dollar sell-off for investments are going to China and other global markets, it means that these are much higher than NASDAQ, etc., US stock markets. True or false? Okay, so if US dollar sell-off for investments are going to China, it means that these are much higher than NASDAQ, etc. True or false? If false, where from is the US dollar sell-off happening to pull it down? Yeah, okay. So if you look at a price to earnings ratio, I did a piece on this today. Let me just call it up, and I'll just bear with me a minute, and I'll just find a piece and I'll send it to you. I did a price to earnings ratio. You can see the comparisons of the price to earning ratio in comparison with China. So I'm going to pop it in the chat, Ravinda. Okay, there's a little article I wrote today from forexlive.com, and it's just comparing US stocks and China's stocks. So I think that might be a helpful article for you to read. So the price to earnings ratio is still, like the NASDAQ is really high, it's nearly 10. and some of the Chinese stocks are very, very low. So there is still more interest in US stocks than China stocks, although China stocks are starting to recover quickly. And there's, you know, I think the CSI 300 is up nearly 20%, you know, in either this month or last month, or certainly recently. You can read it on our tradable sentiment shifts. We've got a report about it there. So there still is comparatively more strength in the US side of things than China. So I hope that helps. John Pierre Fisher, US dollar CAD would be good to short. Yeah, tentatively, we would favor a US dollar CAD downside because you've got oil, you know, broadly supported. Oil prices broadly supported here. And we can see US dollar weakness generally in the market. So we would favor US dollar CAD downside. If you were selling it, you know, look to sell it back from a return up to one of the pivot points. Wouldn't favor selling it at market, but it is a pair that would be, we would have a downward bias on that. Yeah, Ravinder, questions as clear as anything. Thanking you. Is there any fundamentals affecting pound yen I should know about? I'm currently in a pound yen long. That's the right side of the pound yen to be in at the moment. Let's just going to take a look at the chart. You're definitely the right side of the market, Hasmar, because we have been seeing this pound upside. The only difficulty is we don't exactly know why the pound is rallying higher. Is it on a delayed reaction to the fiscal stimulus announced by the UK yesterday? Hard to believe that's the case because it was all expected. Is it because of some kind of a gentle compromise by the EU on, you know, zonal fishing grounds? Again, hard to buy fully into that narrative as well. So yes, pound yen longs are right because risk sentiment is generally on, which weakens the Japanese yen. We can see, looking at the currency meters, we can see that we have broad yen weakness and broad Swiss franc weakness and broad dollar weakness is what we expect in a gentle risk on markets. So pound, there's nothing particularly to be aware of. The only thing to be aware of is if risk sentiment changes, Hasmar, so say we start seeing equity markets falling off, or as a result of something like rising COVID-19 cases, then you'd want to liquidate the position if you see the market go into a risk-off tone. You know, bond yields falling, equity markets falling, commodities like copper falling, oil prices falling, anything like that, then you want to liquidate that position as the yen would strengthen. And just don't get too, you know, remember that we've got the ongoing Brexit concerns in the pound as well. So that's something to be aware of. And obviously a good point for profit taking on a daily perspective would be up into that top of that ADR high 136 region. Let's just check. I'm just going to have a look around, see if there's any other sort of major levels that I'm just missing. Just you're into this overhead resistance level, so that's to be aware of. There's a minor overhead resistance level here, so you would expect profit taking in this level. So that's probably why we've seen a little bit of profit taking into that level. So just be aware that we're in this overhead resistance level. So it's profit taking here, and if we break above that level, then it's up to the ADR high for the day. Oh, Anthony, that you're very welcome. The team posted those up. I will do some feedback to the team on our analyst. We have a weekly call when we get together, and I'll mention that to the guys. So yeah, really glad that was helpful, Anthony, and thank you for the feedback as well. Dishabi, hello. Yeah, can we get an idea from retail sentiment to enter a trade? retail sentiment, some brokers giving their clients current order placements for currency pairs and percentages in medium term, most retail traders positioning wrong side of the actual market side. Yeah, Deshabi, the problem that you have is that because the Forex market is decentralized, you might get a perspective from one broker. So I haven't heard many people using retail sentiment to enter a trade as a general, as a general strategy. Sometimes people will make a note that a lot of retail traders are one side of the market or this side of the market, and it can be a helpful contrarian signal. But aside from that, aside from what you've outlined, Deshabi, I don't know any other way of using the information, because most brokers will have a relatively limited exposure to the market from their clients, just because there's so many different individuals and so many different investment and broker houses out there. But for the general point you've mentioned, Deshabi, yeah, I think that's fine. Oh yeah, hi Dean. Yeah, the pivots code for TradingView, that is, you just go to indicators, you just go to pivot point standard, and what you want to do is, the way you set it up is you just have it, just click S1, S2 if you want the S2 as well. The more you click these, you start to lose the shape of the chart. So that's why we just like the S1, R1, S1. See, when you start doing that, you see the chart start getting compressed. So that's just a thing to be aware of. And just use the classic setting and use the daily time frame. And if you want to show yesterday's pivot points, you just put that there, and you can see what yesterday's were as well. Okay. Hope that's helpful, Dean. Welcome, Richard. Yeah, great, Ravinder. Hi, Cos. Is it safe to say that during the COVID cases, despite the risk-on sentiment, it is pressuring the Australian US dollar? Yeah, Carlos, it is. The big narrative is economic recovery on one hand versus shutdowns and COVID-19 outbreaks. So with Victoria, the most populous, second most populous state in Australia, having new shutdown measures, that's going to reduce economic activity, and it pressures the Australian dollar. Obviously, the Aussie US dollar pair is also going to be dollar driven. So you've got to remember that dollar flows are important in that pair as well. So what's happening with the dollar will impact that. I was check. Oh, I was check. Just wondering what needs to happen for the Swiss franc and the Japanese yen to regain their safe haven status. They haven't lost their safe haven status, Wojciech. Sometimes we see the Swiss franc operating slightly differently. There is often some intervention happening by the Swiss National Bank, which has just got, we've seen higher flows coming from the SNB recently. But I think the Swiss franc and the Japanese yen still maintain their safe haven status. I prefer trading the yen over the Swiss franc because of the, sometimes the muddiness that you see in the Swiss franc is less likely to see in the Japanese yen. And also, obviously, we're seeing the US dollar operate as a safe haven safe haven currency alongside them both. So they are both still safe havens. And you only got to look at the Euro Swiss franc pair to see the safe haven status of the Swiss franc in play that's still there. Anthony, yeah, I went through the US dollar unemployment claims. What you're looking at here is you want to see anything that pushes the market the same way. So ideally, you want to see initial jobless claims. For a bullish reading, we want to see something below 1.2 million for initial jobless claims. And then we want to see something below 18.6 million for the continuous claims. continuous claims are arguably more important now than initial jobless claims, because we want to know how many people are still unemployed. That's the key metric right now. So if we got those, a couple of readings below minimum expectations, expect that economic recovery trade to carry on, euro US dollar upside. If, on the other hand, we saw initial jobless claim back 1.9 million, we start seeing an uptrend in that, that will be indicating that the recent sort of shutdowns across certain states and just limiting activity is also hitting the jobs market. Similarly, anything above 19.8 million would potentially change this economic recovery hope narrative for today, and we could see some risk off trading. So euro US dollar downside could be in order, potentially Australian dollar US dollar downside as well. So that would be a couple of pairs to look at for the downside. Oh, as recently we're following US dollar moves. Yeah, but remember the US dollar has been acting as a safe haven currency as well recently. So with the US dollar, Japanese yen, and the Swiss franc moving together, that's we've been seeing that on safe haven flows. The US dollar's been joining them. Shelby, that's great. No, you're welcome, Carlos. Was checked. No, you're welcome. That's great. Angle, okay, interesting. Why trade Forex? What is your opinion about trading stock CFD based on Squawk news? I find more easy to take trades and sentiment. It's not changing too often like Forex. Ex Alibaba and Biogen yesterday or SAP today. When trade Forex, you must match two currency, but each news can affect sentiment. When trading Forex news catalyst, it's changing too often during a trading session. But when trading in news like SAP have an 8% increase in profits above estimate, you can't go wrong because there's a lower probability to have another news in the same day with SAP. I want to say that fundamental catalyst is more evident and lasting. Angle, yeah, I think one of the reasons that we have changed our branding is that we want to widen the markets that we're covering. Once you have that principle of fundamental analysis, it can be applied across a whole range of different markets, including stock CFD. So there's absolutely nothing wrong with that direction, and it's nothing wrong with adding different markets into your trading. Forex is particularly difficult at the moment. We've got central banks around the world coordinatedly cutting interest rates. So it's very hard to always pick out these clear directions. And a number of people have been finding the last couple of months difficult and challenging in trading Forex. So, finding other markets is only a good thing in my book, because you're using the same principles. The only thing to be aware of is that you're understanding each market you're trading, and you don't just enter a new market and make some silly mistakes. So that's the only thing to be aware of. Shauna, hi, I joined Forest Source back in February. All I really know is COVID trading. Is trading without COVID any easier? What is the difference? Yeah, Shauna, at the moment, there are so many competing narratives going on that it's really quite complicated trading compared to normal trading. So often, we're in the middle of a crisis, Shauna, and you'll look back in your trading path and you'll see this as, okay, that was a big recessionary global financial crisis brought on by a pandemic, and it has some interesting characteristics. Trading can, during these times, be simple and hard. Simple sometimes because you get long, hard moves, particularly in the start of March, and as the pandemic was breaking, you could see some very clear moves in trading. That won't necessarily be obvious to you if you've just started, you're just sort of finding your feet. But looking back in hindsight, you'll start to recognize these kinds of markets and the opportunities that they provide. The difference without COVID is that you have more central bank divergence. You have more countries going in different directions. So it's a little bit easier to pick trade directions. Whereas at the moment, we're kind of, we're trading on, which countries getting out of COVID quicker than the next one. Oh, Australia is struggling, so it's selling the Australian dollar. Which fiscal stimulus is about to be, released. Is it going? Is the European Recovery Fund going to be accepted next week at the Eurogroup summit? Oh, that's a positive for the euro. So that's really the difference. Is that I think it's easier. It is a long story short, but central banks will have more impact, and the interest rate differentials and forward guidance of central banks will be less based around pure uncertainty, which is quite frankly what we have at the moment, Shauna. We don't know what's going to be happening in the future. Yeah, okay, that's great. Okay, guys. Well, guys, thank you very much. Managed to get through all the questions. Again, very good questions. So thank you very much for the time that you've taken today. I want to say good day to you, and I will be back again next week, planning on being back on Monday. So normal service should resume. I hope you will have a really good afternoon. And don't forget the initial jobless claims and continued jobless claims that we have coming up. So thank you very much, guys, for your input. Take care now and have a very good afternoon. Thank you. Goodbye.